Hey friends, Lucian here with the Bullish Bears team, making this video on longing versus shorting a stock. Just kind of explaining some of the differences of both, and then I'm showing you, based upon how I make my watch list videos at night, just to show you different, couple different ways on how, to look at things, whether you're going to go long or whether you're going to go short. So when I'm making this video, I actually just created a watch list. I'm making this video on November 13th, and I'm making it for November 14th watch list, right? So this is basically on day trading, but the the strategy is pretty much the same for swing trading as well, in the sense of when I'm showing charts. Um, Obviously, I'm showing you key support and resistance levels. And what we do is we send out alerts to our followers. So if you're not a member yet and following us, head over to bullishbears.com. That's our website here. Subscribe to our watch list and trade alerts. Again, obviously, when you're on our website, take our free courses. We have a couple $1,000s worth of free courses and a free trade room as well. And if you haven't joined us on Facebook yet, we have an awesome community of over 17,000 members. No spam in there, just really great content. So we have a great community to help you for support. Lots of courses, just with jam-packed with content, and then a trade room where you can kind of shadow other traders, and then we do watch lists at night with trade alerts, right? The trade alerts are basically of areas of key breakout and breakdown areas of potential breakout areas on daily charts, right? So this is the watch list. I kind of did it already for tomorrow, but I want to show you how I have it set up, and then show you longing versus shorting and what you'd be potentially looking for. Okay, so right now, when I do the watch list at night for the community, I'm trying to I'm looking for stocks that are holding their highs on the day. Sometimes I'll see ones that break out on the daily and then they push back down, but might have potential continuation up. But ideally, I'm looking for something like this, that a stock that's held its highs on the day, right? Now it is overextended. I'll get to that bit in a moment, but ideally stocks that are finishing closing towards the high of the day for a potential breakout the following day. Obviously, you're never going to know for sure until the market opens what's going to happen the following day. But when I set these alerts up that you see here, you can see this stock is finishing at its high of day, right at a $0.50 amount, whole and $0.50 amounts. That's huge. So at least it's a great area to be able to know for managing risk. If this stock breaks above 150, potentially could move up. If it breaks down below $1.50, that's potentially a sign of weakness. So when I set these alerts up, what I do is I just kind of find a break. This is basically it's yearly resistance. It's been running for a few days at a $0.50 amount. I just go to that dollar amount area. I right click, press create alert, and then obviously I move it up and down and obviously create the alert. And that's how you see at $1.50. So how do you determine how you're going to trade this stock? Well, now come tomorrow, if pre-market, obviously I'm going to check pre-market and see what's happening pre-market, see if there's any movement, if it's above or below this $1.50 area. That's going to be the first thing. I'm going to check and see if there's any news, as a catalyst up or down. But this 150 is a huge area. If the market opens and it breaks above 150, it's got some volume, it looks decent. I'm looking at level 2 in time and sales. If the EMAs, the 9 are over the 20, then I would like this. If it's 9s over the 20 and it's about to break out and go above that 150 at open, then I might take a position, getting my position as close to the 9 EMA as possible, not far, not in an area like, let's say, over here, not way out here, but more along the lines of down in here. Obviously, this is a 5-minute chart, but just give you an example, showing you on a 1 minute. I want to get it more closer to this 9 EMA. Now, the whole thing is, do you get in before it breaks 150 or after it breaks 150. That's a matter of your preference and your risk tolerance. Obviously, you have to look at the charts and how they're set up. But a lot of times, a stock will break out above a key resistance area, and then it'll just run and take off, and then eventually find a top and collapse down, or it'll do a little false breakout, go up a penny or two and collapse, or it'll break out and then collapse, or it'll break out, come back, retest, and then go back up. So again, what's going to happen with the stock? I don't know. Got to watch it and see. So now tomorrow when I go to look at it and I look pre-market, the market opens. If I see a lot of the catalyst, again, this is going to now determine whether you're going to go long or short, right? If the stock is breaking above 150, it looks like it might run, then you might take a position long, risking $1.50 as your stop. Don't risk this entire candle because that's bad. Way too bad. Risk management too big. You want to have tight risk management, especially when day trading. You want to have at least a 2-to-1 profit loss ratio, meaning if you're risking 10 cents to make 20, risk 50 cents to make $1. Don't risk $1 to make 10 cents. Don't risk 50 cents to make 20. That's terrible risk management. So really tight risk management. So again, you have to watch all of the factors on how, what's happening tomorrow when the market opens to decide what you're going to do on a trade like this, right? So if it breaks above, you might take it long and then wait for it. And obviously, if it's trending along the 9s over the 20, it's tight, you get a good entry using 150 as your stop, then you might be able to ride the stock until you get a close below the 9 and then get out if it's a trending stock. If it goes parabolic and goes way outside above the 9 and it's like it breaks out above, then you are going to probably want to take your profits once it hits a top, waiting for re-entry if it comes back down towards the moving average lines. So that's a strategy with going long, so if it's, that's an area so you could get in either now in anticipation of the breaks. Let's say it's at 147 or 48 and it's still kind of got this, it's still trending up. You might get in around, let's say you can get an entry around 47 or 48 and then the stock breaks, you can continue and then ride it as it breaks through. Or you can get in at 147, 48 if it's looking good, the 9's above the 20 and you get a good entry. If it rejects at 150, then you could obviously, you have a tight stop, you get out. You can get in at the break above the 150 once it, it retests and goes back up. Or, that's, again, some long strategies. Another way you can do it long is, let's say, a different version of long called a dip buy. If 150 rejects and this thing just completely tanks, the 20 goes above the 9 and price starts to fall, and then it finds a base, where you can see this is kind of a base area, right? It's not falling below it. Let me find one that's let me see, OCP I think was one today. Was it OCP or ONC? ONC. Oh, what the heck? What was that one from earlier today? Let me go over to OCP. Which one was it? I don't see it here. ONC. Let me find one for a moment here that can give you a potential of a dip buy. Let's go over here. Now you can do dip buys when a stock goes up and really pulls back, or as it's falling down and finds a support level. I'm not finding the greatest. Somewhat like this, when a stock completely collapses and falls, finds like a support level over here. Once it's far away from the EMAs, it naturally wants to gravitate back. So if you got in on something, I'm not saying to get in on something like this, but if you find after you see it hitting support here, you can, get in here and ride it up to the EMA for scalps. Obviously, you want to get one that, as far away from the EMAs as possible. That would be a dip buy falling down. Also, there's dip buys when a stock goes up and it's bull flagging and pulls back to the EMAs, like something like this. Goes up, pulls back, and then it breaks above, so it's staying above the moving average lines, that's a bull flag. So that's like a dip buy, right? Pulling back, dip buy there, dip buy, even like going down as it's going down, dip buys the further away they are from the moving average lines, right? So going back to this example here, those are some examples of going long. Going short could be, let's say when the market goes to open, if it's rejecting at this $1.50 area and it's not holding, well, this thing could really give back a lot. It's got a long way to potentially fall. The problem is finding a broker to allow you shares to short. TD Ameritrade is not the greatest broker for shorting. Obviously, NTB, these are all not to borrow. You can't short. But a company like Interactive Brokers, they're much better for shorting. This is DOS Trader. This is a platform. I spend about $150 a month to use their montage to trade. I really like it. Interactive Brokers has a free platform. It's pretty decent. It's similar to DOS. I just pay for DOS because I love this platform setup here. But let's see, MY, what the heck was that stock? MYMMF. I don't know if they have shares to short. MYMMF. Oh, I can't tell on that one. Doesn't look like there was on that one. So what you'd want to do is watch the price go up, and if it rejects, find a broker that allows you shares to potentially short. Again, you have to look for crossovers. Is the 20 over the 9? Is it bearish? Is it rolling over? Look at support lines. Look at level 2 in time and sales. So when you see this alert, who knows if it's going to go up? It's either going to go up or it's going to go down. If it goes up, you know the different ways that you can play it bullish. But if it goes down, obviously, if it's rejecting at 150, then you can short it down. You want to short as high, as close to resistance levels as possible. So, and like buying a stock on the way up, you buy low, sell high. With shorting, you sell high and buy low. Sell at a resistance level, buy towards a support level. Obviously, I don't know what the stock's going to do, but that's one way to do it. If it doesn't break 150, you can potentially short it on the way down, obviously looking at support, resistance, level 2, time and sales, all of that. The other thing you can do is you could also wait for the stock to completely break out. Let's say it breaks 150, it totally breaks out, and you don't take a long position. You let the alert trigger, and you let it form a top and then form a reversal, short it on a reversal down. So take a company, let's say, like, I think Craig was one recently, where you could... Yeah, perfect example on Craig. Let me go back over here. When a stock like this goes like way up, you can see it's way outside the Bollinger Bands. It's super overbought, wants to pull back in. Now again, on a 5-minute chart, this is going to be kind of tough. Shorting a really big one with huge candlesticks is really kind of tough. That's why you got to come in and look in even a shorter time frame, and then look at when a stock hits these peak levels like this. It's easier to, when you're on some of these that might get overextended, to get in on the 1 minute, risking a 1 minute candle rather than a big candle. Like, how do you, like, it's harder to manage your risk in here. That's why you got to come in. And come in sometimes to the 1 minute. Now, if you're going to short on the 5 minute, look for smaller candles like doji, like a smaller doji candle, smaller inverse hammer, something like that. But if you're going to short, obviously you're shorting towards a peak resistance level, and obviously covering near the moving average line. So going back to MYMMF, so this is a perfect example. Let's say MYMMF went all the way up and went parabolic. You can let it form a top. Once it finds a reversal, short it down using the EMAs as your lines of support. The 9, the 20, VWAP, that's all support. And then watching. You're looking for stocks that create higher highs, for going long, and then ones that are creating lower lows or lower highs on the way down, right? So you can see a stock like this right here. You come down, is there lower, higher? Or look down over here, lower high, lower high, lower high, lower high, lower high, and then obviously you can see it just kind of collapse down. It's a bear flag, bear flag. So again, with the strategy, again, you're with long or short, it's all a matter of your preference. And obviously, shorting is more difficult if you don't have a broker that can locate shares for you. That's a whole other thing. I like, again, interactive brokers. But when you're looking at these alerts, you're going to decide whether you're going to take it long or short, let it break out or break down. It's all, again, a matter of your preference when trading. Let's take a look at a couple more here. So you can see a stock like ZX. This one had a huge breakout out in the daily today. You can see it finished at 212. You have some support right here, right around a little bit less than that $2 marker. I would really pay attention to probably $2 because it's a psychological support level and resistance level. So now, obviously, you have a clearly defined top over here at 232. So now if the stock, I have an alert here at 212. If it breaks above, then obviously I know, the wicks get a little bit volatile in here, but, there's some potential continuation. If I got in above 212 and if it collapsed below 212, I'm out. I'm not letting it fall all the way down here. But, it might, again, you got to look at the movement, see what's happening, look at the overall, time and sales, all that level 2. And then with an anticipation, if it's still climbing up, if it's got these moving average lines, like it's moving up, the 9's over the 20, it's kind of riding together. I might take a possible entry in anticipation of a break of 232. And then I would also be careful of 250 psychological resistance area. Watch what's happening on level 2 and time and sales. Again, that would be my strategy with going long. Short, I would watch 212. If it rejects, I would watch this area $2. This is kind of a tight area. I would want to see it break down. If it starts breaking down below $2, then you got to be careful right here on this 196. If this thing breaks 196, it could really fall. So if I was going to short it, if it didn't break this 212, I'm going to be cautious of these support areas over here. If it breaks out, if I didn't want to take it long, I can watch when there's a potential. I would watch for resistance or rejection around potentially 232, and then I would look to get a short as close to 232 as possible, and then obviously risking 232 if it got up towards that area as my stop loss, and then watching these support levels. So again, you can either take a stock long or short. Buy the ask, sell the bid, right? If you go long, you could buy the ask to get in immediately, and to sell immediately, sell the bid. The reverse is true when shorting. Sell the bid to get your position, buy to ask to cover, right? Buy to ask to cover, sell the bid to get in. Obviously, you want to try and get a better fill, use a limit order, try to get a better deal, but it's just the inverse of longing, buy or sell the bid, buy the ask. That's how you would enter and exit a position shorting. So let's look at some of these other examples for the watch list, right? So again, looking at this alert level, it's just a key level. You're going to decide whether you take it long or short, all depending on your strategy. It's good to learn both strategies. And that's why if you're not comfortable, if you're like, hey, listen, I don't understand how to short, it's all foreign to me. Well, that's why the beauty of opening an account with Thinkorswim and opening our virtual platform with them or interactive brokers is awesome. You can practice. You can make hundreds of practice trades, longing and shorting to get comfortable. We're under the motto, we teach people, listen, because we hear a lot of people say, oh, well, trading with a virtual account, it's not the same as trading with real money. And we'd say, well, yeah, that's absolutely true. The emotions are completely different. But if you're not heavily invested emotionally into your virtual account and treating it exactly the way that you would a real account, if you don't have at least a 60 to 65% win ratio with at least a 2-to-1 profit loss ratio in every single trade, if you're not treating that and you don't have that success set up with your virtual account, then you're never going to make money with real money, trading, day trading. You might get some wins for sure, but you're not sustaining a long-term trading strategy. It's not going to be sustainable. And so that's where if you're not comfortable shorting, then open a virtual account and make a couple hundred practice short trades. That's it until you get comfortable, and then obviously trade the trend. If the market's going up, you can be more of a bull. If the market's turning and going down, you can be more of a bear. Obviously, you want to be flexible when trading, and it's just all about practice. Let's take a look at APTO. You can see it's at its yearly high. And so I put it right here at or above 209. You can see support at these wick levels here. If it breaks 209, it might have a potential to run. So I might take a long on it. Again, now it's tougher when a stock's at a yearly high. You don't necessarily know how high it's going to go. You obviously got to go to a weekly chart and then kind of go and see from there. See other resistance areas, see if there's other gaps that need to be filled. But if you're getting in on something that's breaking a yearly high, you're best to take some profits when it forms a top and then wait for a reversal to come back down to the moving average line. So again, the more a stock gets outside of these moving average or far away from moving average lines, it wants to pull back in. If it gets parabolic, take your profits, wait to see if it's going to create another pattern and go up. If it's trending, so if it breaks like 209 and it kind of is a slow grind up and you get a right entry, you could just get in and ride the 9. A breakdown below the 9 is a potentially bearish sign. Look at this. It went up, kind of traded sideways, had kind of a flat top right here, broke out, kind of went above, and then you started seeing a close below the 9 over here, potential weakness, kind of comes back down, it retests this area, sometimes it'll break down, and then potential further continuation. Again, you would not going to know, no one can tell you what a stock's going to do. It's all about support and resistance and watching the 9 and the 20. Is the 9 above the 20 being bullish, or is the 9 below the 20 being bearish? Or are the 9 and the 20 pinched together and trading sideways for consolidation? Much harder to trade. It's super hard to trade these stocks that trade sideways like this. You want a clear separation, either going up or going down. And then obviously looking at the intraday charts and seeing, on the 5-minute, seeing what the overall trend is. But again, it's just looking for key breakout areas and resistance areas and either deciding if you're going to take it long or short and finding out what's happening intraday. ENPH, again, so now here's a perfect example of one that is overextended. When a stock's been overextended for at least 3 green days, usually at some point after that 3rd day, it's going to want to pull back at some point. Sometimes you get a 4th or 5th day, but usually when it's overextended, there's usually a day that it's going to want to pull back. So a lot of shorts will look for a stock that's had over at least 3 green days and wait for a potential short. So you could either wait and see this thing break out and find a reversal on a top, or you can see where it's closed today at 232. If the stock opens below 232 tomorrow and falls, this is a potential short, a potential pullback, looking at these support levels, right? So you can get in if you got in. If it fell below 232, you can get an entry below there, risking 232 or 236. I'd probably use previous day close, which would be 232 as my stop, and then watching it and see where it's going to fall from there. Obviously, this 13 EMA, or the 9 EMA, it's far away from that. It might at some point it's either the 9's got to catch up to it, or this is going to pull back down. And a lot of times you'll see, especially on these small cap stocks, they run up and they just smack right down. They touch that 9 and boom, they'll pop right back up. But this is definitely going to be in the eyes of some shorts. Obviously, 3 green days, overextended. It's at some point going to want to pull back. Again, all a matter of your trading strategy. When you see the alert, you're going to decide. Again, here, taking it above 236, you're going to want to be very careful at 250, which will be resistance levels. So if you got in at the break of 236, it rejects at 250, you might want to take your profits. You also might see it fall right back down here and retest and go back up. Got to watch the patterns. BLOZF, this is getting close to its yearly high. If it breaks above that $80, $81, that's a breakout area, potentially. It's got to hold. If it falls back down, that would be a bearish sign. SECO, this has been bear flagging. Now it's potentially reversing. You see this 9 and this 20, the 9 starting to cross over the 20. That's a bullish sign. So now you want to see it. If it's going to go up, you can see it came back down. It's right about the average moving average lines, these small candles, good risk management there. So now, because it's at 896 or in the 890s, I'd like to see it ideally break that $9. So now you got to decide would you get in at 890, 95, and if it rejects at $9, get out, or do you let it break $9 and then come back down and retest before you get an entry, like a bull flag gets up, pulls back, and then goes. That's going to be more of what your decision is, but pay attention, to these 9 and these 20s, watching them cross over, looking at it on the daily chart as well as the 5-minute, as well as the 1, and looking for the great setups overall. Obviously, a news catalyst is huge in finding potential breakout areas. Sometimes you'll get just a technical breakout, and then a lot of times if you can get a daily breakout with news, that's obviously the best setup. USAT, another one, or did I already, I don't know if I already looked, which one was the other one that I looked at? Oh, okay, so USAT is very similar to EMPH. I know that looked similar. Over 3 green days, there's 4 green days at a yearly high. It's going to want to pull back at some point, who knows when. Shorts are going to watch this to see if it creates a top and falls back down below previous close. Previous close is 755. I'd probably be more careful around 750. So if this thing fell below 750, I might risk taking a short below 750, risking maybe 755 or 760 as my stop. So if it reversed and fell down, it came down and then it went back up and started closing around here, I'd probably cover my position and get out. But, if this falls below 750, this has some room to run. It can go all the way down here. It's far away from the 9 EMA. And AMPE, this one right here, now this is going to be a matter of what your preference, right? This thing's it's riding the 9. You can see, look at all these candles. It's kind of bouncing right around this 9. You can see this wedge kind of pattern forming. It's kind of like a symmetrical triangle. Usually, when you have a symmetrical triangle, wherever the direction of the trend is going is usually what's going to happen. This is an uptrend, so you would think this thing's going to break out, but you never know when or how long it'll take. You're going to have to be careful and watch this 134 area. Watch if it breaks or rejects or it's a false breakout. So you could either you could take an entry before and ride it out, or take an entry, if it rejects, get out, or wait for it to break above 134, come back, retest, find your entry there to go up, or you could take a potential short. This is not the greatest short because it's kind of looks like it's in an uptrend, but that's just some examples on what you'd be looking for. So this is just basically how I do my watch list every night, what I'm looking for, and then you just determine whether you're going to take a long or a short. Look at the overall trend, look at the market. If the market's in an overall uptrend, it might be a little bit more difficult to short. If the market's in a downtrend, it might be a little bit more difficult to long. But with day trading, it's all about support and resistance, taking your profits and finding your reentries. Don't get too greedy and get your positions as close to the 9 as possible. And that's with both. If you're shorting too, get your entry as close to, either a top where it's super far extended over a top, or if it's bear flagging down, finding your entry, as the flag goes and touches an EMA and starts to break down, try to find your entry more there. Getting your entries as far away from the moving average lines as possible or as close to it, whether you're, again, shorting at a top or at a dip buy, obviously far away from the moving averages, buying on a dip far away and riding it towards the moving average lines and seeing those being resistance. And if they're going to break through, if it not and it rejects, take your profits. So hopefully this watch list video helped you and how I basically set it up with going like long or short. Again, it's a matter of your preference. It's a little bit harder to short in the sense with finding shares to short with your broker. However, a broker like Interactive Brokers is really good. If you haven't been over to our website yet, again, head over to bullishbears.com. Take our free courses. We have a couple $1,000s worth of free trading over here. Make sure that you take advantage of it. We go so much more into day trading and momentum trading strategies. We have a basic course and an advanced one. Talk about support, resistance, EMAs, all of this type of stuff over there. So make sure you take our free courses. Also, subscribe to our daily watch list and trade alerts over here. So we give pretty much a daily watch list with trade alerts, and we have a trade room as well. We offer this all for free to our community. Again, join us over here on Facebook. We have our banner here. The links are also below in this video. We offer all of this for free to our community. We are not membership based. Ideally, we'd like to stay that way. We may become membership based someday down the road. We don't want to. In order for us to do that, we basically grow and rely on donations from our community members. So if you'd like to donate, you can click this donation button over here. And we have donation options for as low as the cost of 1 to 2 trades a month. So we could easily charge $150 a month for everything we're offering with our community, our trade room, our courses, our watch list, everything that we offer, but we're charging nothing. So in return, if you like what we're offering and you want to donate 10, 20 bucks, whatever it is to help us continue to grow, we'd greatly appreciate it. Again, click on the donate button or click on the banner right over here. Again, last but not least, make sure you subscribe to our YouTube channel, watch our videos, click the notification bell. We have lots of content over here, as you can see. Just look at these massive amounts of videos that we have to offer. So hopefully this video helped you here, and we will see you in our community. Enjoy.